Hello and welcome to the show. Thanks very much for being here, everybody. Bear with me for 2 seconds, and here I am. Okay, so I had planned to talk a lot today, and I'm going to cover most of those topics, hopefully, that I had wanted to. But I have a disease, right? I've got a disease. So, first off, I need you to hit the like button because it might help a little bit. And also, bear with me, and then I'll then hit the like button again after that. So I need you to do both those things, or who knows, maybe I'll never recover. So welcome to the show. Thanks very much for everybody being here. Thank you for your patience. Today we're going to talk about real estate. With the it ifs in real estate. Well, people will tell you all sorts of different things about property. Owning your home might be your American dream. Owning 10 might be more like it. Sure, call it 100. You might be watching this from your car on your phone, and owning a home might indeed seem like a dream. Whatever your goals, I'll do my best to help. Wherever you come from, we all have something in common. None of us are where we aim to be yet. You don't need MOAS to start climbing the ladder, and there is no magic in taking the first step. That first step might be in understanding the market cycles, where we are now and what's coming next. Or it might be in learning how to start trading houses without actually buying or selling houses. There is a marketing idea that suggests the real estate market has an 18-year cycle. 2 7-year blocks and a 4-year block, that is determined by land values and demographics. This may or may not be the case, but there are certainly charts. We'll take a look at them later. First, let's take a look at those phases, or talk about them. The first phase that we'll start with is the recovery phase. This begins at the recession lows, when occupancy and rental rates are low. New construction will have slowed, and banks will own a high proportion of real estate. These are all data sets that you can get for free on the internet, and more trusted and looked to authorities are published regularly. I'll endeavor to update the description in this video with some of them. For individual property owners at this particular phase, especially in specific locations, it will feel very much like a recession, or the recession phase you've just come from. Experts would be looking for gradual occupancy rates to increase, and they'd be looking in particular, if they were, for capital appreciation was what you'd be looking for in those particular moments. If you had the money, banks would be finding it very tough to lend, but if you had the money, you'd be looking for opportunities that provided capital appreciation as opposed to necessarily yield, and that might provide you with the biggest opportunities in distressed properties. After this comes the expansion phase. This is when the market has completely recovered from the recession. Construction would be high, and property values are typically experiencing successively quarterly price rises. This is when most investors will buy or renovate, because the downtime between tenants would be low, and so the opportunity costs are low, and so a perceived risk is low. Though the opportunity phase, of course, will come in the recovery phases, when you've got the best meat chocolate on your biscuit. Often people call the next phase some variation of the word supply. Whether or not you believe in these cycles or not, it's helpful to know how other people talk about them. This is when the long-term leases have been secured, so income is future-proofed, perhaps even debentured, and it may well be that those executives that have organized those business deals can sell them on as debt instruments and profit from that future income now, which is part of the problem when that got carried away in 2008. This is when your long-term leases have been secured, future-proofed your income, construction will be peaking, rental growth will be slowing, and vacancy periods will be extending. This precedes the recession phase. Now, we love a recession phase. We love it, right? Especially the last couple of generations. Oh my God, we can't get enough of them. It kind of puts like shame to this 18-year cycle idea, but then, we didn't invent that. We're just laughing at it and using it as an instrument to understand things, okay? So the recession phase, when our rents will be below, right? Our rent increases will at this stage be below inflation. That's a crucial figure. Market shocks, whichever, whenever, however, and you should see my boobs are as large as mountains. Market shocks will cause demand to plummet, and that can be for all sorts of narratives, right? The charts will tell us afterwards. The news will explain all about it. Thank goodness, eh? And just as supply will be reaching market saturation too, which is awful news, isn't it? Awful news. And pardon me if my brain isn't working completely as I think it is. In this period, we expect prices to bottom out, and the high of the previous cycle will be where we find those lows of this one, which will begin the recovery phase. So it has been said that this cycle lasts approximately 18 years. Who has 18 years to get rich? What sort of American dream is 18 years? I'm not sure if I'm like, am I missing something? Because it's immediately lost all excitement. And are houses a commodity, or are they somewhere to live? In some parts of the world, being rich doesn't even guarantee security. So, recently you'll have seen that reports that have come out. Bloomberg made a big deal about it. How those of us, those among us who are on $250,000 a month, salaried, are still living paycheck to paycheck because costs are high, no matter what level of society you're in, or what rung you've made it to on that ladder. So where are we in the current cycle in your area? This is quite a long intro, isn't it? Maybe I should have had slides or something. Let me know in the comments where we are in the cycle in your area. What does it feel like? We come from all corners of the world. How does the credit and banking system interact with underlying values in your country, state, or city? You'll know yourself. Things are different place to place, just as they are person to person. The truth is, there's no 18-year cycle. That's stupid. There is a dynamic between land value and the capitalization of credit. It's driven by the US market, and you don't need a house to trade real estate. You don't even need to sell one if you're sure the markets are screwed, and nor do you need a leveraged account to short it. Now, bear in mind, the less sophisticated investor will think that the real estate market is next for the chop, and they won't understand that markets, generally speaking, move together. There are those that think real estate is flying and about to completely die. They would raise their hand to vote for cannibalism, only they already ate both of them there in the recent drop, didn't they? So we could now go and look at US eviction bans by state. We could talk about occupancy rental rates. We could talk about growth in the rent prices and compare that to inflation increases. We could do a whole heap of different things. But instead, we'll first have a quick look at this point here. Ba-ding. On the prices roll. According to CFRA research, real estate ETFs that welcomed 13.3 billion last year have since seen capital slip away with net outflows of 2.1 billion year to date through early June. Okay, that's not that much, is it? Not surprising, real estate ETFs have been swept up in the sharp decline across the broader stock market, right? That's all I wanted to say. That's it. There's loads of other things and there's loads of other articles, but they'd be people's opinions and I couldn't give a flying F about them. This is VNQ. It is the Vanguard Real Estate ETF. It's traded on ARCA, where you'll find our lovely market makers and huge, massive internalization. But isn't it great the amount we're getting to learn? And they thought we were just a bunch of silly apes. So, yes, there's lots of different things to look at here. This is the one ETF I've picked because we talked about the figure there. This particular gentleman was saying those figures in the billions and the ups and the downs. Well, this is the market we're talking about, the real estate ETF, market is approximately 88 billion in total. And of that 88 billion, 44 odd billion of it is in this one ETF, right? So if you're trading real estate, you don't actually need to buy and sell houses. You don't need to have a deposit and a guarantor and a monthly income in order to get a mortgage so that you can get on the property ladder and start making your first investments and trades. Nor do you need to own anything that's brick and mortar in order to be a serious trader. You can do this all on an ETF. And here's one that accounts for approximately half of the total market. This is the Vanguard ETF. The ticker is VNQ. And you can see on the charts here, we've got it on the daily time frame. There's a rocky outcrop flash down at 80. That's quite interesting. I'd say it's interesting. On the hourly time frame, load this little blighter up. You can see there's also a flash up at 97.25. And we'll do the TA. You'll probably get both of those flashes, won't you? That speaks to large volatility either side of the price, and very interesting with bearing in mind that previous conversation about market cycles. Isn't that interesting? Yes. So let's do this quickly. Look at this on the weekly time frame. What do we see? You're at your 200 period moving average. You've already had a retracement. They talk about 18-year cycles. Well, here's the weekly time frame, and you can see there's places. This is where it began. This is a low. Then there's moves up, there's lows, there's highs, there's lows, there's highs, there's lows, there's highs, there's lows. And how long do they last? Well, they didn't look like 18 years to me. This particular one, right, that's 140 bars on the weekly, right? So let's put it to the monthly because this is going to get tiresome. Give me that ruler back, ruler back. And let's take this particular dip out of the, right, which was in 2008. Here's the low. This is the high. 25 bars, right? We'll call that 2 years. That's a 2-year cycle so far. We'll confirm that between the next low and the next high. 19 bars, right? Like you could even take that. Probably you'd say that it was in around here, and that you could even go all the way up 21. It's kind of like 2 years. Yeah, you're saying 2 years again. Yeah, I agree with you. 2 years. Next one, right? 19, right? I could imagine I could draw that again and get 19 to look a little bit like 24. Kind of 2 years, right? And then this next cycle, right? Up and around, what was the next drop, right? Somewhere in around here. You'd probably say, that was thing not distinctly different from something like 2 years. Here's a low, right? That's what we're really looking for now. Here's the next high in around that. Is about 2 years, right? You've kind of had that, and you've had a dip down on the monthly time frame to the 50 simple period moving average. And when you're looking at this particular chart, right, it isn't like with envy at the cheapest house on the most expensive street in your town thinking that's a doer-upper, I could make 20% on that and I'll take the risk. I don't care about the market cycle. This is looking at something that nearly permanently goes up. So we're interested in this from a perspective of how to trade. And then we're going to drop down now, looking at this. We've gone through the centerline RSI on the monthly time frame. That's to be aware of that. You've approached the 50 period simple moving average. The last time you got near there, you went through it, right? Recovery, sure, but you went through it here, at which point you'd gone significantly below the centerline on RSI, and you'd also put in a similar high in and around here. So the highs happened, the move down has happened to a certain extent, but it hasn't been as violent. Then much of the previous moves weren't in this upward trend, which is still intact on a monthly time frame, and you've got a test of a support level where you might get a bounce. So, there's that. And here's the volume. We haven't seen that represented anything like that subsequently, right? So that was a peak. This part of volume was at the low end of a trend. And then we had various market cycles, right? Whether that be across the 18-year period or something much tighter and constricted. Did it include this aspect of banks having a larger number of properties on their balance sheet, the occupancy rates changing? Is it true to say that just because inflation is very high that rent prices aren't going up? And what's the relative difference? And has there really been a desperate crash? And is the people's heads in for the chop, right? A la the SARS. No, well, looking in here, you're seeing like 2008, yeah, huge crash. And then COVID, we had another crash. And would that constitute a market cycle? Well, in the 2 years we're looking at here, we can see that there's a lot of different opportunities to be trading long and short. And when you're trading an ETF, you're not worried about, what are the, or notary fees or the conveyancing fees, and what about the like dealing with the neighbours and making sure, right, that there's their bread in the oven when people come around to see the place, right? How does it smell the way it should? What about the carpets and lights? Do we have to say we're keeping the appliances or what, right? What about the stress of moving and so on? Can you even be bothered with it, right? There's fees involved, and when it comes to paying, taxes, capital gains, you're going to be looking at that. If you're even in like a different country, your real estate market is exposed to other dynamics that led by the US market, and you're not necessarily there or aware of or understanding the day-to-day how it looks. So like if you've got other risks and considerations to take account for, maybe it is you don't want to actually go to the bother of buying an actual house. You'd rather just do this. And maybe you don't have the money to buy a house, in which case you just do this. And maybe, you're thinking this is an ETF. I can put it in a Roth IRA and not pay any fucking tax on it, right? And that would be interesting, wouldn't it? So then you're like, there's a 50 simple period moving average. There's a 200 period. This thing's not it's not doing terrible, is it? Considering it contains so much of the overall market. And we've got more to talk about with regards to the overall market. We're not going to start drawing anything yet. There's the weekly time frame. You're at that 200 period moving average. You've got these lows that you had in their previous market lows into the bearish control zone. These are the sort of places you'd like to see to define price action. If you were saying like we'd come in for opportunity, perhaps you'd like to see it in around those areas. That's perfectly in trend line. There's also one that you can see that comes across the top. And together that looks like it's putting in something like a wedge, which might be an accumulation formation. You look to the top side, you could say that's potentially in head and shoulders. You've had your move. Does it need to break below previous levels? Not necessarily. It's at a 200 period moving average on the weekly. MACD, you've had what you're going to get out of that. And the ATR tells you on the weekly time frame at 446. That's 5%. There of price action. You could see that on a weekly time frame. That's a lot of volatility. This is a bounce area. There could be huge opportunity. We'll drop back down and see. There's also other ways of trading this same thing on different tickers. Isn't that interesting? I hope you're enjoying the show today. If you do, hit the like button. So we'll go now down to the 2-day time frame. Why not? Why not, TradeSpotter? So on the 2-day time frame, 50 simple coming in for the 200. You've tested that 200 once and been knocked down. Within this part of the trend, you might say, well, you've put in a lower oscillation. Perhaps you go and try and put a higher one in. Now that would be lower high, but you could still do that and reach that 200 period. There could be a cross between these moving average coming up at some point, which might define the extent of any sort of extension to the lower side of the price at the minute. Before it does that, well, you'd look left and then see your horizontals, and at this stage we'd probably start putting in some drawings and say this is your previous high here. Drop that horizontal on and then make him slightly brighter. At this stage you'd say we've got one, we'll have to change that because it's the same color as the current price line. We'll make it yellow, we'll make it 2 pixels. And as we can see, it's not exactly the same level, but this is the high of the previous market cycle. And it may well be that you find your lows in and around, your lows of this market cycle may come in and around the highs of the previous market cycle. So if you're looking at this over that sort of a time frame, right, 2008 up to 2022, which isn't 18 years, but it's not far off it. Maybe you're thinking these are, this is one of the phases and this is us reaching these places. It may well be that you're looking at this as a 2-year market cycle, in which case, same story, right? Maybe you're in the opportunity areas. This is just me speaking about this particular chart and looking at it from the top side and talking about the bullish thesis. We'll go on to talk about other opportunities and the way to trade them in a moment. So in this time frame, you're also seeing perhaps that idea of a wedge. You're definitely seeing some sort of a downward sloping supply line, very dramatic here recently, and then this more gradual accumulation, which speaks to something we saw on the RSI earlier. Your MACD is not giving you anything positive with regards to moves to the top side, but you can see that there's a higher low on the histogram, and on your RSI you're also seeing a higher low, and we see a lower low on price action, right? That's bullish divergence, and that normally pushes price. Should you see a retracement and a local low, that defines a local low being getting beyond a 236 on a Fibonacci sequence. That would define it as a local low. Then we'd be able to point to the divergence, and then we'll be able to say, when somebody comes around and they're like, I know all about subsidence and yada, 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 and you see you've got Japanese knotweed growing over there, so that's going to reduce the value of your house by, and that you can tell them to fuck off because you actually understand about divergence and you're not trading that stupid house because that'd be ridiculous and you can't bother with the taxes. You've got this ETF and you can see that prices when they get above the 236 likely do come up higher, perhaps test a golden pocket retracement. That would be in line with the idea of this macro high coming in, 1, 2, and a third touch, at which stage you'd be in a broadening formation. You could check in with Rocky if you want to see what broadening wedge does. He loves them. So his channel is www.youtube.com/RockyOutcrop. And he can help you trade anything. So this is a broadening wedges formation. This is like a descending one, and it speaks to accumulation. Overall, that gives you a picture in the chart that like you're asking, is it perhaps at an opportunity level? I could tell you that that's the answer. Perhaps, yes. So that's what that looks like on the 2-day. Drop down to the daily time frame. What do we see down here on the daily? Well, and speaking about opportunities, you could see then a further low. What do we say about divergence? Well, we like to see 3 touches of it. People have their cycles and that's wonderful. And we've got ours and it's called divergence and we like 3 touches of it and shut up, right? So here we are. 1, maybe another 1 or 2. That speaks to a continuation of this trend to the downside. Does that come in a number of touches and follow this previous formation? Does it speak to a sharp decline and a market shock? Quite perhaps it does. That would be 10% off. That's interesting. Markets are open and that is the largest ETF where you can see there may be a macro low coming in. It may be 10% lower we are in price action at the minute. You've got to pay attention to the charts. We've gone through them and spoken about the potential starting point report opportunity and that you don't need to be able to, have particular privilege to be able to trade real estate. And the idea that it's an American dream or that it's the answer to your freedom isn't true. It's your ability to earn money consistently. That's what determines success and will provide the difference between being rich or not, because even rich people find things difficult, right? So money isn't easy, right? Even if you've got it. Here's the 4-hour time frame, and you can see that 200 period moving average above the 50 simple, price below them both. You're in a downtrend. It's not like you needed that confirmation. If you did, there you go. I've got a wet fish that wants to have a conversation with you. Here's across to the top side on the MACD. That's interesting. That's coming in at the same time as that divergence that we saw on other time frames. You don't see that divergence here on the 4-hour. This is a significant time frame, though. If you break this trend, I'd be interested to see how price action evolves. The trend being this downward sloping resistance line you see on the RSI on the 4-hour time frame. Looking at the Fibonacci sequence, maybe you're thinking now with this 1, 2, 3 peaks on price action, even though you don't have 3 troughs, where would you be looking at should you not put in a lower low on the RSI, which would be that further touch of divergence we're speaking about, and then saying where would be a successful high, where would we like to see the RSI push above? Well, the 236, and you're already in around that area at the minute on the RSI. So if you do break to the top side, that move might take you up to a macro level of resistance, and that could be in and around here. The 4-hour time frame, what does my arrow say? It points to this on the 1-hour, where we have a rocky splash at 97.25, a healthy percentage move from where we are now. And if we don't get there until we've touched 80, then wow, what a move that is. So that's the VNQ ETF. And one of the ways that you can trade real estate, whether or not you believe in those cycles or not, you can definitely, look at charts. And that's how people would talk about things. Might have covered more and looked at various links and not that I've got waiting, but we'll do that on, say, part 2 of this video, where we'll talk about those occupancy rates, the effect with regards to the dynamic and inflation and the capitalization of credit and its intersection with the value of the underlying assets in any area in the world. So let me know in the comments where you come from and what your thoughts are on that, and we'll cover more of that in part 2. There's other things to talk about, like that's just one ETF. Here's JRE. It was launched in 2021, June 2021. SPACR chart there. Weekly, you can see that's where it began. This is a forward-facing, quote-unquote, ETF, the same focus, but they try to focus, people will tell you it's a very much a subjective discipline, buying and selling houses, and it's that same narrative is wrapped around the marketing for this ETF. There's gaps all over the place. There's things to look at depending on your perspective. This points to the fact that if something's set up to be slightly higher risk, and the reason that I point it out now is to make and illustrate this particular point, that if something's set up to provide you with an increased return, then it's likely also to come with a slightly higher risk. So that's JRE, similar idea. And if things were in an uptrend and you were looking for an increased exposure to that upside from as opposed to what you would get within VNQ, which, as I say, it accounts for 50% of the capitalization of this entire sector. So, each to their own. But like this would provide you with that increased exposure. And talking about increased exposure, and if perhaps you're trading these things and you've got a long only account, how do you take advantage of moves to the downside? You don't need to sell a house if you think markets are screwed. As I said earlier, there are other ways of getting exposure to those downward moves or providing a cover should you own a house and not want to sell it but think the markets are going to crash. And generally speaking, a cover would be insurance over a position, and you would anticipate that as being short term, at least relative to your hold of the underlying position. Otherwise, why would you be holding it in the first instance? And if you don't follow along, maybe these shows aren't really for you. Okay, so hit that like button if you do, right? So, and I can talk about those things and explain them more. That was just a joke, right? So that everybody's self-edified who does understand, because of course you do understand, right? And if you felt like that was patronizing, I also apologize. Jeez, it's difficult out here, right? So here's the highs, and that's the double top, and this put in a new low. That's not great. That's the weekly time frame, and I was really making it to illustrate a point which we've now made well. Here's a short ETF. There's a flash 2146. You're up towards it at 0.25% a day, 20 clean. That's nice to see. I do like those numbers. A little bit of volume coming in here. That's when you've definitively tested that 50 simple, and maybe ultimately this move takes you up to the 200 at 23.35. That's just a brief look at the weekly time frame on an ETF, which will provide you one-to-one short exposure. One-to-one being it's not a leveraged ETF. Of course it is leveraged, but in the way in which these short exposure ETFs are constructed are with a series of complicated swaps. These are close every day, and each account is compounded. So if they've made money, they close and they trade with a bigger position tomorrow, and vice versa. They've lost money, slightly smaller. Very sensible way to trade, generally speaking. And if you're a quant firm, it's the only way to trade. So here we have it, REK. This is a ETF that will provide you, it's the ProShares Short Real Estate. It'll provide you with exposure to the short side. And it may be that this chart is pointing to, on the smaller time frames, I say weekly, but you can see here that it doesn't necessarily suggest you're going to break that trend overall, just an oscillation to the top side, right? Continuation of a trend already in motion. A train choo-choo, you know how it goes. They don't flip and change direction, trains, they'll have to slow down and go the other direction, right? So anywho, it's my analogy. I'll use it as a like, right? So this is high, this is a low. At this stage, you've made a retracement, and you'd be looking at your Fibonacci's and saying, well, how far did it go, and what might it go on to? Well, you're at your 236. That speaks to for the hesitation. There's a little bit of a signal box, we'll call it here, and we'll wait to see, right? National Rail and Britain, they're on strike. Is it the same where you are? Everybody's striking. A general strike? Why the hell not, right? Unionizing all over the place. Good idea, right? Power to the people. That's what it, right? So, I'm all about that, right? People don't understand capitalism. There's a variety of stakeholders, and it makes the process work. If you're not greasing my wheels and whatnot, see, right? Then what? And everybody's the butcher and the baker. They don't act for their own benevolence. And if it's So this will provide you with exposure to the short side. So if you think prices are dropping, you'd probably be right. 21.46, that's a little bit of a move it's got left. You're breaking above the 236 at that stage. You might be looking for higher moves. 382 comes in around at 22.85, 200 period moving average above that still. Perhaps if that's your high, then it takes as much time as it to get there as it would for the 200 to meet you at the same place. And, if you're the sort of person that didn't like hang around in the cold and the wet and the wind and the rain, you could probably work out how this moving average was calculated, and that would give you some expectation of with regards to time should you be looking for that move to the top side. I'm not going to do it for you because I'm not your mammy, right? That's the weekly. Here's the daily time frame. 50 simples crossed above the 200. That speaks to continuation of a trend that could potentially, take you to those levels we were speaking about. And that's the one-to-one exposure short side. As I say, you'd usually hold these instruments for a very small period of time relative to your investment, should it be as a hedge or using it as an option contract to provide you with some sort of cover, insurance over another investment. But these aren't even necessarily appropriate for these sort of things because, if I do go and show you what this is like on the monthly time frame, that's brutal, right? This is not a hodling asset. It doesn't matter what you think is coming, what type of apocalyptic event you're trading for. This, my friends, is not the asset to hodl. And you want to be careful if you are going long on it. It would be for a short period of time. You're not looking for extensive moves unless you think the markets are really going to go for something terrible. This is those COVID lows, as we talked about. This is it pushing up towards higher levels at the minute of its current trend. Nowhere near as bad as that. And as such, it's due to the fact, partly to the compounding nature of this asset. So that's REK. REK. And then you've got SRS. This provides you very much similar instrument, but it's 2x short leverage. So it increases your exposure twice as much with the same original capital invested. It's leveraged, so bear in mind it likely has more volatile moves. It's at 18.21 at the minute. That's the monthly. But more interestingly, what you can see here, when we slip through the time frames, weekly, 50 simple, quite a large distance there up to the 200, up at 32.85. That speaks to a potential 100% move in price action on this thing. And, we looked at the one-to-one exposure and you saw the distance in that move, which speaks to the difference in opportunity. And as I said at the very open, that comes with increased risk. So bear that in mind. But that's the opportunity. And then you take that now down to the 2-day time frame here. You can see you've had quite a strong oscillation. You're already above that 200 period moving average. And you don't generally spend much time above that, in the history of this thing. Though eventually, at some stage in the future, there may well be a disaster. But currently, right, we're not looking to those levels. And if you're trading for that and you're using this kind of asset, then you're perhaps doing it wrong, right? There'll be other things that will go to trade and ways to do that if you're trying to aim for this particular flash that wouldn't provide you the same level of risk that it would be hodling something like this. Though it does speak to the opportunity you could have if you get it a perfect area. Though there will be rebalancing and so on that goes with this. So, this is not the sort of chart you trade the way you might do others. Bear that in mind, and everything I said about maintaining short-term exposure to these short construction ETFs, right? These inverse ETFs, that's what it is, an inverse ETF. So, and that's the volume here. You've not had anything necessarily cutting the legs off that, but it looks like a little bit of a gap probably here on the daily time frame. And this is just, again, more illustration of that trend and danger that you're putting yourself in. And if you really like that, right, here's a 3x ETF. Gives you 3 times, triple the exposure, right? So you could look for huge moves on this sort of thing. You're also putting in higher highs in this part of the trend. Lots of volume picking up now. This thing providing a lot of interest to people hedging there. On the weekly time frame, again, you can see some interest. 75.2, currently at 55.64. That's the weekly time frame. Maybe this thing takes big jumps there quite quickly. You can get exposure to these things with most brokers. IBKR one option, the link to them in the description. It's an affiliate link. If you use it, I get some sort of kickback. Don't think it's that much. You get some sort of benefit. Again, not sure how much it is worth to you, but it's better than nothing. And it's there. So if you fancy using it, thanks. So anyway, you'd be looking at this thing and you'd be saying, no, not drawing a Fibonacci from the all-time high to the all-time low in the weekly time frame. No, I'm not doing that. Like I said, short-term exposure on it. This would be where I'd be looking for extensions against this particular move to the downside. And where's your 1.13? You've gone beyond that. Here's your 1618. It's at 7201. That's near enough, close enough. Close enough is near enough. You know that you always have enough to rock you out crop flash. If you don't have that, get it. It's on his Patreon indicator tier. So that's what we'll be looking at. 4 hour more interest there, similar situation, slightly clearer picture of the candlesticks. Momentum indicators all suggesting the same thing. early here, you probably get a slightly close to, or you probably get a slightly closer picture of any trends or inflections within this here. So you drop below the center line, but at that stage, it's price action's hardly come back down much at all. Continuation divergence, that would be to the top side, 168, where you'd be aiming for, even on the early time frame. Doesn't look like it's all that much unachievable. If you take this line along and define the trend, you don't need to get much more complicated than that so far. There are other things you could do, horizontals you'd look to, but you're above most of them at this stage. It's a retest, and you're wondering if it catches this 50 simple. You're probably also wondering about the 20 period. You got your Bollinger Bands. Gives a little bit of interest there. You've not got desperate volatility within these ranging moves. The ATR at the minute on this time frame, that's the 1 hours in it, 135. So, that's 2% or more on your average true range. You can see that that's all in the context of like volatility not being out of not being out of character currently for what you're seeing typically on this thing. So very achievable, those targets on this chart, right? That's 3x exposure short side on ETF. So you can short these things as well. You can short the inverse ETF, which is the equivalent of going long on the long, on the VNQ, right? You want exposure, you want it leveraged, you think 97.25 from 89 isn't enough. You're not interested in like GRE giving you like a larger percentage move, and you do have leveraged account. You don't mind about going short, and you're crazy, right? And you're absolutely crazy. And for some reason, like, you get this and you think it's going to break down, which it currently doesn't look like it's going to, but it may get to a point in future when it does. And at that stage, you're thinking, well, I'm really, really bullish on real estate. You could short the inverse ETF, of course you could, and then that would provide you with that same leveraged exposure. But you bear in mind, you'd be trading leveraged on a leveraged inverse. Well, you're really up the wazoo with your risk there. So that is a long and short on the investment cycles, and where we might be with 18-year ideas where we 774 within that idea of the 774, just to speak more on it, and then go like a little bit back here, weekly time frame, and see, this thing here only gives us back to 2004, right? So add 18 years on to, right, interesting, right? Within those 18 years, you'd be looking at this is not conforming, right? This is not conforming. This would be like a crash and a recession. This would be recovery. You'd be looking at 7 years of this. Within it, you'd expect perhaps even sooner to have seen a market shock that took prices back down within the trend, and then continuation after some sort of retracement here, significant against the previous momentum, but not like breaking the overall trend, continuation topside afterwards. And those little bump and continuations that you see during expansion and ahead of like really hyper supply phases within the market. And you might have anticipated this happening early. So, a lot of people will be looking at this cycle, the cyclists, right? They're huge in Amsterdam. Shout out to everybody watching from Amsterdam, right? The cyclists are huge out there. And you might be saying, is my cycle broken? In which case, there's loads of shops out there too. It's fantastic. The artisan crafts and everything, right? There's whole shops given over to selling like one particular type of cookery ware and that. Crazy, right? It's crazy. Anywho, great that everybody's skills are respected and whatnot. And it's Amazon, that not as much of a damage there as like as they've done other communities. Interesting. You never have a Walmart in the middle of Amsterdam too. It's interesting how they can do that and just still be such a densely populated city. Incredible, right? Even though the whole thing's underwater. Why they got the infrastructure so good, but other places just can't even collect the bins properly. Anyway, it's not for us to question why. It's us to buy and short sell ETFs because they won't let us on the property ladder because you gotta be rich to get anywhere nowadays. Anywho, you've watched TradeSpawn before, so you know how I feel. This system looks like it's potentially broken, though every system does flawed and every bureaucracy corrupt. Right, great. That was brilliant. Thanks very much for watching this introduction to investment cycles with regards to real estate. And now we'll go on to look at other things. We've also talked recently about bonds. Here's your 2-year, and we were talking about this trend and how things were moving. I'm not going to spend a lot of time on that, though there are things to look at. The volatility indicator was the thing to pay a lot of attention to. Down on the 4-hour time frame, that's where I'd be looking to see what's going on. Is this a bull flag or is this a double top? You've gone slightly higher than your previous high. You're obviously lower with regards to the RSI in the 4-hour time frame. You've not, though, managed to get a true rejection from this area yet. and price action's doing well. That was pushing outside the top Bollinger Band as it did here. You didn't have a desperate retracement to the basis line yet. So is this a bull flag? There's a good big gap below there on the 4 hour on daily time frame. Still there, right? Still there. And then you've got Rocket Outcross down at 88.51. So, how is this going to work? They'd be looking at it from this downward sloping line here if it was a bull flag and thinking, when it breaks to the top side, it'd be testing the previous high and that might go crazy. And still better pay attention to that. And should it get up around those levels, I'd be very wary of it breaking higher, but it's also a super easy area to manage risk for a short. And then these are really clear areas to target. But a safer way of trading that breakdown would be at breaking this idea of a bull flag, and that would be like a retracement beyond 50% in this particular candle. And then still a lot of chocolate on the biscuit if you're looking for that particular type of trade. 200 period moving average down there. It's like calling out for a test. It really, 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 really is. And this tiny flick of bullish divergence that you got here, that reaction coming up to your previous level of resistance in a really strongly trending market, you might anticipate something like that. Having hit the same side of the Bollinger Band slightly higher there, closing outside it, that gives you a different picture. It's still continued enthusiasm. You're not sure if that's broken. Had it finished within the Bollinger Band at this stage, you would have said, basis lines the next for it. At this stage, it's potentially putting in the bullish formation. I would be weary of catching anyone out who was trading this gap too soon. So, either side of that particular formation, as long as it provides you with a clean area for managing your risk, is a good thing to look to. And this is a volatility ETF of all these other indicators, right? Here's your 10 of these other trades. This is a 10-year US Treasury bonds taking a move to the top side, which is counter to like the trend that you would naturally expect if you were seeing like strong moves on these, which these are perhaps turning around then, right? And you've got the flash down at 1247. It's at 3.227 at the minute. That's 50% off. These are huge amounts of money that'll be made by some of the people watching these videos. Okay, so that's not what we're talking about, but it was interesting to get a broader perspective on things. And I hope I never come across as patronizing. I'm also providing value for everybody, and I really want to make an impact here. Right, so SPY, we've opened, right? We've opened. Congratulations, this trade looked like it worked quite well so far. So far. Your 236 at this stage, is that on this current low? Let me just quickly double check. No, it's slightly lower. 236 so far providing resistance. You've not yet managed to make it above there. Should you, your next target would be 395. That's the basis line of the Bollinger Bands. In truth, you got very close to them there recently. Doji at the bottom side of the trend, a little bit of a gap down there, so you can't discount the idea of going further. That's the daily time frame, so it's real. And again, you're wondering, is this like putting in a bullish formation, tiny positive retracement that leads to like a larger move, expressing like some of the elasticity we saw at this period, and coming back up to a significant level of where we saw volume traded previously, which would be support that came in at this area. Likely that would be resistance, and it'd be 386. So on your road to 395, you're going to find a roundabout in at 386. And if you don't know how to drive around a roundabout, you better freaking look it up, right? This is me talking to SPY, not you, though. How are you doing? So there's this previous 236, and you could imagine it spent some time around there and frustrate people, couldn't you? What's VIX doing? Not very much. I see it's at 0.03% change. Well, it's because I've not been talking about it much there. It filled the gap afterwards. It caught the 50 simple. You're bouncing between the basis line and the top Bollinger Band. Currently wondering, is volatility going to explode? What's SPY going to do? You've touched that top side here. Lower, there's two different trends going on. The one that I'd be looking to the top side, I'd measure with his demand line, and the one that I'd be looking at with regards to resistance wouldn't be this upward sloping supply line, because that defines this upward sloping formation, right? It's this downward sloping formation that I'd be looking at here, be taking the top side of, which means that you're coming in for like a period of an inflection point on this thing at some point, right? Perhaps when it reaches the apex, which should be like somewhere around there probably, right? I mean, like if you say that that's where it's like going to finish, that's 220. So what, like 180 something? What, 220? No, 100 and... What am I talking about? Looking for 75% of 220. Right, so let's just guess. That looks like the right shape. Pardon me, brain isn't working. It's like I say, it's a disease. Clearly you've not been hitting enough of the like button. So, once each isn't enough. Anyway, right, we'll call it 150 because, like, my brain isn't interested in helping me out. Sorry, Jamie, right? Sorry. Yeah, and we'll call it 150, and I forgot why we're doing that. And now we're just going back to looking at that and saying, what, August? I don't know, right? Huge moves in August? I don't know. I don't even know what I'm talking about. Brain, why did you abandon me so? Anyway, this is the supply line, this is the demand line, two different formations. Overall, perhaps looks like SP. You'd have to look at across different time frames and put, emphasis on different things. In particular, this downward sloping formation at the minute, you've broken out of that. Do you get a retest of this line here? I suppose you've had one. Expect continuation of that. Should you move to the downside? There's a 200 period moving average at 27.08. Easily lose that. 3 off 30. What's that as a percentage, right? Whoa, brain, come on, come back to me, brain. Yeah, see glimmers of brain. And so that was giving us a picture of the overall market. And what we can see today is it's not doing crazy amounts of things. That's what we can see. And what we're seeing over on our favorite stocks, GME, currently 141.71. That's not all that different from yesterday's price action, though. It was a large move from its open because it opened 138.24 is the low, not necessarily its open. Let me just check. I wasn't looking at open. Adale, a time frame, no gap on the Adale time frame, and a positive candle so far. We closed here yesterday at 140, and we opened here today at 138.70, and then we wicked a little bit down 50 cents. Okay, sorry, just catching up. And then, great, so there would have been a gap, not really a gap on the chart visually, no visual gap, but there would have been an area of interest in regards to the demand aspect. How strong is it? We'd be wondering. Any move in a 4 hour above that previous level, I wouldn't say is enthusiastic or any meaningful until such times as it closed. Within that, even then you've got like a question mark to ask. The question to ask is like, well, it could keep going because then you're looking for a close subsequently above 145 and so on. 200 period moving average hasn't tested that on this oscillation yet. Maybe it's aiming for that. But then you would put in to context the fact that that's coming now towards this previous high, and should it reach that previous high before price action closes here, then you're still on for the idea of head and shoulders and this thing topping out, which is what you're seeing drawn on chart here on the daily time frame. So I'd be looking at this in 4 hour and 1 hour time frame, giving me an idea of if it a breakdown or not. At the minute it's going on okay. That's held the center line, the RSI, and bounced up. That's good to see 1-2 times within this trend. So that's enough to say, like, let's try the top side, right? Try into the bullish control zone, right? Come on, right? You would think so, but we'll go down through the time frames, see what they're telling us. May well be that we've expended our energy getting here, which would then be confluent with a greater trend. So let's see. This is a lower low here, but then you caught the center line RSI exactly at that point, and the basis line, the Bollinger Bands, having tested topside but not broken outside them significantly. You got an open and close there, mind you. So, like, that's good to see. Having got that once and then I tested the basis line, head towards top side of the Bollinger Bands, though it already happened. We got rejected. And 200 period moving average. So it's the 200 period moving average on the daily time frame here at 147.97. That's what I'd really like to see broken. As the first thing. Then there's the macro downward sloping resistance at 155, and then there's a horizontal level up around 165, 167. They're all important areas with regards to expecting to find resistance. Should you not find anything there, then I'd expect it to come back and test it for support at least. And then all of that would need to be happening against what is this overall and very, very much the dominant trend. If you did make it back around, you have done like above a 236 in the golden pocket, you'd be in for up here around $200, and that'd be the top side of this move, testing this previous high. That'd be great to see. At that stage, I'd be very, very weary of how the internet was talking about GME, and I'd be saying, hopefully, doomslayers, if they're already got their GME, and it was from breakouts of these areas and these extensions were the targets they were looking for, and if it was an instrument they'd be taking that was extra exposure other than just buying hodling shares, and maybe they'd be taking profit around these levels. That's what I'd be hoping doomslayers would be doing. But I'd also be looking for retests on price action to come in around these levels to get me the entries that I'm currently not prepared to take, because I'm anticipating price really coming back down to these levels and there being like inflection points here that we've not yet seen. Because on the higher time frames, you not see it on the momentum yet, but on the higher time frames, right, we've been here before, right? We've done this. We're happy for it to go up, but we also plan for every scenario. And like, because like the series of probabilities state that, you know, you need to put more emphasis on like certain things, then that's why I am led to believe that perhaps you get tested these levels again, right? Whoop-de-doop-de. So that's what I'm talking about, that thing. Possibly for head and shoulders, like, you know, on the other hand, this is an upward sloping trend. You could extend the support line that's called recent price action that we're looking at there down to these previous lows. You could say this is oscillation. It's going to at least test the top side of this channel, and that channel is not particularly important because, you know, it's just the downward sloping resistance. It's diagonal, and actually what you're looking at is the horizontal levels. Those definitive ones are really from here. Other than the downward sloping trend, the horizontal levels that are important are back up around 192, and then above that 250, and then above that back up at 350, and then above that up at 475, and they're all incredibly important. Each one of those artifacts has more singular importance than this downward sloping formation, but it holds relevance until it doesn't, right? It is what is until it is what isn't. Thanks very much for that one, Rocky. Probably the best lesson you'll get in trading. So right, here's a simple, a simple TA. We talked about that, holding the center line. That's the 200 period moving average. 250 simple coming towards it now. You've had a test of both, and that's like a good positive reaction since you are at the top side of the Bollinger Bands, and to go beyond that now would be unusual. You have a little nobble there on that cross on the top one, and if you see tight contraction on these now, then I'd expect an explosion of volatility that could and would be anticipated regardless of the direction with price, because you're at a very important zone here, and that this formation isn't just people watching along with me that know about it, it's everyone who copies me and talks about it as well. Only joking. Right, so this is I'd be looking at that as an entry, but you know, we'll see what happens. So 4 hour time frame, you've got a positive cross in the MACD, though it's on the wrong side to take the trade. You're above the 200 period moving average, so that's good. I mean, you could have got it in around before the crosses then, if you were able to see the future, right? So that wasn't possible, but you did have low that was bullishly divergent on your RSI, so that gave you like this. No, it wasn't. Sorry, pardon me. So you didn't necessarily have a signal, and you'd gone through the 200, and you're in the downtrend. So it's not necessarily obvious that was a test, other than the fact that Rocky was saying, you know, retests around 115, 116 are expected after this high. But, you know, it could have then led to the move to the top side. So that was the place to enter if you're looking to take profit on a option contract in around here or whatever, maybe, right? I don't know. And, you know, you bear it in your own TA and trade whatever you want, do whatever you want. Don't let anyone tell you different. And you can achieve your goals without compromising. And that's exactly the fucking example I'm putting out here. You know, there's lots of different lessons, but that's chief among them. $50 simple, heading for the 200 period moving average. What will prices decide, right? So here's a 1 hour time frame. Boom, boom, boom. That's a complex head and shoulders if I ever saw one. Oh my goodness. You know, you can see the harmonics jumping out at you at this stage, and right, you've had a take profit target. You've reached that at this stage. Then you had a retracement of bullish. Is there, you know, that was like, no, it wasn't. But, you know, having reclaimed the center line at this stage, you would have anticipated like at least a strong test of this resistance level, after which stage, you know, the only thing to look to is this high here, or people try to retake the same trade that was available on that moment. And the RSI, what's it telling you? Well, you've pushed slightly higher than this previous high. Price action hasn't done. If you're to collapse here, that would be bad, because it looked like continuation divergence. Well, no, wait a minute. Aye, and it would be bad. So where is the breakdown from that low to that high? If you come across over here, 138.77. So you want to sort of hold those levels. It'd be nice if that was the next oscillation. You push back up and tested those 150s, 160s top side levels. That'd be great. Before and then or after, we'll analyze it again. Sorry. Thereafter, before, this is before. Hi! So hit that like button, and brain, get back in there. So that's 236, yeah, so you know, if we've been there already, we have been, so this is enough, right? Does it have to go again? Doesn't, no, one's enough. But if it does get there again, we'll see what does, especially if it hasn't been back to resistance since. Which is trying at the minute, not 0.98%, though I think that's probably like largely at the whims of the greater market, which so far you've had a positive move, having come to the basis line of those on the 1 hour time frames, buy and move back up again. Though this looks like a contraction here, it's started to expand on the Bollinger Bands, but that's like within its previous range anyway. And then your lows, obviously bullishly divergent on this time frame, gives you the idea of getting back to resistance. So still anticipate this thing come back up to around 386. I'd hope people bet against it, and it happened anyway, because I like people having egg on their face. It's beautiful, isn't it? Do you like it? It's like a famous piece of art. Anyway, there's the AMCs. Wait, wow. Well, we talked about this a different kind. This is the wow I drew subsequently to make it look, because I thought I'd lost my actual wow. Here, wow, we got the surprised wow. And so this also, price action is in like a contraction. It was a contraction here. There's lower highs, higher lows. This potential Gartley. At this stage, the D, you may be looking for a golden pocket retracement. That's what you got here from your C to your D. Your golden pocket was in around 1250, and that's slightly lower, whatever. You got in around here. That was a potential entry. You got this move here, went up to 1424. It's a significant percentage move, and it's higher than this previous high. Boom, and it's like a big push up on the RSI, but you managed to get rejected from the bullish control zone. And then that's on the 1 hour time frame up to the 4 hour there. That was a rejection of the 200 period moving average. And on the daily time frame, it was the 50 simple. So, you're looking at that 50 simple on that daily time frame, or maybe in advance of that, you got the 50 simple and the 400 on the 4 hour and the 200 on the 4 hour, and thinking that they maybe like provide you with some idea of the range. I'd say they do. They're like, obviously, at the same time you have the Bollinger Bands, which are like, if you did break the 50 simple, they come in above your previous low, so that's positive with regards to like continuation of this tightening formation here. And that supply line then gets like a degree of extra validity. If it did break below it, it'd look then straight to 1025 and then down at 947. And if that all broke, then I'd be looking at a continuation to the downside, and it may well be something that matches up around here in a 1618, and you get 7.77. And that's where I'd like to buy more if I was buying more, right? 7.77. But that's not what we're talking about. We're talking about continuation of formation that's currently in action. It may well be that you've had your low, because, right, you definitely got a lengthy of warnings about it between Rocky and myself, right, from a long time in advance to when it was happening, and then afterwards. And then, if you're not got it yet, these are the other options, and it's just be like adding the scaling into a position, perhaps for others. Anyway, maybe you've already taken profit depending on the instrument and whatnot. It's not for me to tell you how to trade. It's just to provide help and whatnot. So hi everybody. Thanks for watching the show. Thanks for supporting the channel. Thanks for being here. So price action above the 50 simple, and you're looking for it to go up to 200 period. Well, are you really? No, you're not. You're looking for it to probably push towards the top side of the Bollinger Bands and meet this previous horizontal in 382 that you broke down from before, and that would be in at around 1373. That'd be great. You're up the top side now at 1322 is the high of today, 3.88%. You could get a positive reaction here and break towards the top side of this formation quite rapidly, and that would be a similar percentage move as you saw before. Very interesting. Breaking this here downward sloping trend against what would be overall market conditions and making like significantly larger percentage moves than GME, right? It would be doing that partly because of the things we see on the charts. This is starting to look like a significant bottom information. This is a Gartley, the bottom of a trend. This meta flash, Rocky Outcrops flash, has been on the daily time frame from fucking, pardon me, FRU, and any combination of letters thereafter isn't a swear word, so get it up here, right? Everybody, YouTube algorithm, right? I'm not a robot anyway, and I'm sick of proving it. And YouTube algorithm, you need to prove to me that you are, aren't you? You don't. It's just you're so insanely frustrating. Anyway, so there's the 86. You managed to hold that in the most recent retrace. That's great. You get back above this 236 here, which does encompass the most recent low. That'd be good to see. You're at that at the minute, 1305 and whatnot. I'd expect this to be a difficult area to break. And if you did break it, I'd be looking for price action to go up towards 14, high 14. Like, what is that? 1382, and that's only a tiny little bit. After that, I'd expect it to test up 15 bucks. Yay, 15 bucks and change, even better. I would be incredibly surprised if it made it above 1834. Haven't seen what we have so far, but from here, I'd like to see what it does when it meets this potential downward sloping resistance in at around 15 first, in the Bollinger Bands topside at 1447 and whatnot. You extended right outside of them so far, came back, tested the bottom Bollinger Bands. You're really you could be enthusiastic about price when you put some distance between price and the basis line of the Bollinger Bands. These things start pointing to the top side, and like a degree of expansion after a period of contraction, which speaks to continuation of this trend, and finding resistance in at around 14 something and never reaching those 15 levels. And actually, you maybe even had your percentage move for today, and it was a 4% and whatnot. And you're really greedy if you're looking for more and you're trading options. Really, really greedy, right? Especially if you've got short-term expiry. right? Especially if you're doing it on a 4-day week. You got maybe a hole in your head, right? I know it feels like my brain ran away ages ago. So that's what I'm looking at, right? AMC down at the daily. This we didn't do very much, did we? 4 hour. That's what we talked about this briefly. There's the range provided moving average. If you do move to the top side, 1580. I don't think that's happening right now. If it does, great. 2 hour time frame. I don't think so. 2 hour lower highs. You've come back. Tested the basis line here. 250 period. Caught the center line RSI. You've got your MACD cross. That's all lovely jubbly. 200 period moving average. It's for $14, being lower than your previous high within this trend. It would just speak to this being the low and this not being a high and this not being a low and that just being like really just pushing towards putting in a lower high in that. So until it breaks that, I wouldn't be getting excited. It could even wick higher, towards the 15 and then come back. It's a 2 hour time frame. You get loads of that going on in a 2 hour. Here you're at the top side of the Bollinger Bands on 1 hour time frame. You're also on the RSI pushing up towards the bullish control zone. So it could be well now you start tracing this to the top side. If you get any further moves back down again, I'd be thinking that was a bit weak. You've had everything else you wrote for today and you're coming back down to test like 1250 and then even today you see it down at 1170. You could do if it starts moving down now. If it doesn't, then it's tracing the Bollinger Band top side for a while. Maybe we'll see those 15s. Maybes, 15s, 30 minutes. What are we seeing? Long bullish control zone here, like, no feck. So you could have expected better there. It's nice to see the crosses. Price action went through the 200 on the MACD. That's good to see. Average true range says, what do you say? Say much, do you? You're hiding. You're a bit shy today, are you? Oh, come on. 0.26 on a $13. Here, that's not all that interesting. What are we seeing on a 1 hour? 38 cents. That's boring. Well, come on. 4 hour. Oh my God. 75 cents. That's so boring. Don't be talking nonsense. You're going to go explode or something. Oh, I see, right? It's going to explode. Oh, volatility on AMC is going to explode. Holy sugars. Holy sugars, guys. Just don't tell me. No one ever tells me about it. It's always me that has to tell everybody. It's always me. It's always me that has to tell everybody. Look, volatility in JMC. Whoa, look, we draw it in. That's like... That's what it does. It's disgusting. If you have to hear it, it is... Turn off the sound on your charts, right? Turn off the sound. It's one of the first things you do when you open TradingView. Go up settings, measuring settings, turn off sound, flip on this black background, save the polar bears, whatnot. Shout out to the old JME, right? So what's this? Well, it's wow, isn't it? Right? So you don't need me to explain this. You can look it up. On Wikipedia, wow signal and technical analysis. And right, so that's what we're looking at. What else? Like, it was just out of interest, this thing, potential moves on at the minute, 0.7% here, 115. I think there's a little bit of potential here. Got a cross on the 15 minutes. That looks if it's successful, right? Which, it could well be. You've traced the top side of that 200 period moving out for a while and you've broken this downward sloping formation. If we take off this Bollinger Band, get out of my face. And then you can see there's a gap here if it fills after your test, and then you recover this cross, or if this cross is successful. I don't care about filling the gap right now. Wowie. I'm looking at this in the early time frame. You've got this channel, you got this basis line, you got this flash at 12,565. That's like shitloads. And that's really interesting, right? And you got to pay bills and whatnot. Interesting. ARK, talking about paying your bills and what here. 50 below the 200 resistance there. 236 down at 38.19, maybe next entry. The gap's already filled on this thing, and then you've moved to the top side 200 period moving average. Is it resistance at the minute? You're about to break out into the bullish control zone. And this is nothing. This retracement here to fill the gap is nothing on your momentum. It did it in its stride, right? Did it in its stride. What you see is, did it actually also eat a B at the same time? I don't know. We'll see if it breaks above these levels, right? And 50 simple starts orientating to the top side, right? So that's what we're talking about. And what's Bitcoin up to? Right? Tried, bored. It's on its bouncy castle. I told it it's time to go home. It's like putting on its shoes. It's yapping at you. It's all like, oh my goodness, I'm not used to this, right? The energy it takes. There's a 200 period moving average. There's a 236. You're looking at 22,540. If it does push to the top side, that would be a natural area. Find some resistance, wouldn't you? Though you've already got this here. right? It's going to be difficult. Do you want to argue with that? You'll have to go up to 21,260 to do it, Bitcoin. There's the 50 simple. You've recovered that, though you've done that a number of times. Don't think it's the trend very well here. 4 hour, go back there and see where is it. Where is it? Where is it? It's on the way to a flash at 29,270. That'd be back above a number of moving averages. You'd be thinking perhaps a trend had changed. You'd also be filling a gap in the 4 hour time frame. When that happens, it'll be interesting. Aye, will be interesting. And it could just be like, a continuation of a trend already in motion rather than a change of direction. You can still get such a huge, massive percentage move, and that's 30% odd, right? And that's the futures chart in Bitcoin, which will be a large determinant of where Bitcoin itself actually goes. Currently, it's at 20,775. So you're, flirting between contango and backwardization there. Onto the dominance chart. Did you feel that thing anymore? No, you hovered around there, potentially putting in a bear flag. Would it, were it, could it be? If Bitcoin recovers, their alts will go crazy. It might be there's an alt season on the cards. There hasn't really been one since, 4 or 5 years ago. What's the alt season cycle? We screw you, we screw you, we screw you, we screw you. Then we screw you some more. That's generally speaking what it is for most people that I speak to. Out with the communities here. Therefore, the grace of God, there goes all of us, but not really, because we know what we're talking about. Anyhow, so this thing in extensions, and you got your 1618, and then what were you looking for? Well, I was looking for a retest. So either this thing breaks back down again, falls into this formation, you get a less alt season, or it's that cryptocurrency collapses, in which case, Bitcoin does slightly less bad than the general overall cryptocurrency market, and you'll see an increase in the Bitcoin dominance chart, which would speak to, your ability to short alts versus Bitcoin to preserve capital. Maybe your strategy. It's not financial advice, though you would think so. Listen to this show that it would be, wouldn't you? But it isn't crazy. So yeah, no, right, woohoo. And then there's also the potential that, of course, Bitcoin goes up much stronger than any of the other cryptocurrencies, and there's plenty of market reasons why that might happen, right? So you have to pay attention to the charts, right? The charts. Those charts. It's funny, eh? So, when I was in primary school, we did assemblies at the start of every week. You'd have assembly, and you'll have to sing these songs, and often they'd be Christian songs. But I think, different teachers slipped in the odd Cat Stephen efforts at different times or whatnot. Anywho, so that, and at the start of it, you'd have to pray, right? You'd have to pray. And at the end of it, you'd have to pray. I'd say have to, but it wasn't all that much of a chore. And everybody else was doing it too. Mind you, everybody else was doing it, and they'd say, right, close your eyes. That was part of it, right? They'd say, right, close your eyes. And then, so some reason I was like, okay, you have to close your eyes to pray. Like, this is weird, but handy to have instructions, I guess. And then, right, and then they're like, put your hands together and pray, right? So you put your hands together, and I'd obviously open my eyes at this stage, see what's going on. I had to go to Sunday school at one point, right? But it was my first experience of being asked to leave these sort of institutions. Anywho, so then, right, I was like, how do these prayers work anyway? And everybody's praying like this. And I was like, that's not going to work. They're all getting it wrong. Every single one of them's getting it wrong. Because, all you're really doing is pointing at your own head, right? So if this is doing anything, right? If this part of it's doing anything at all you're really doing is pointing at your own head. That is stupid, right? So I figured out a way to make it work, right? This is a top tip for anybody who's managed to make it to the end of the video. You just put your hands on top of your head like this. So this is the way, right? And I figured it out when I was really young, right? And everybody else had their eyes shut, so they never realized. Until, of course, I opened my eyes and saw loads of people laughing. But this was, that was a totally different story, completely unconnected. Anywho, so Nanu. What happened over here? Go back to this place here where we can see the chat box. I can move over here. What is everybody saying? Oh, look at the chat. Oh, chat. Shark, do. That was funny, wasn't it? Peace train. Holy roller. Everyone jump on the peace train. Whoa, peace train, eh? Bouncy. That was yesterday we were bouncy and starting the bouncy. Yo, Luke, how's it going? Thanks, man. David Benefish, such a good time, wasn't it? It was such a good time. These are always the best times. Now, that is the church pop. What's the church pop? NFA. Oh, an NFAs, but could be the only way to see gains when all the markets follow each other down away. NFA. How's it going, KP? Love the bouncy castles, but they make me pee my pants. It's biting coins, obviously. What else would Bitcoin do? Yeah, it's bitting coins. Exactly, bitting them. What is Bitcoin? It's a subsidy. It's a subsidy for those people who add to the integrity of the network, and the network is the thing to focus on when you're talking about the value. Otherwise, talking about speculation. It's the idea that something's going to increase in demand so that you can sell it to somebody else. For they'll need it when you don't. You're only speculating on the price rise. The arches of my groin vault are pointed rather than round to accentuate the vertical shafts. Here, that's interesting. Is that like a evolutionary consequence or what? So what else is up there then? What about all my mods? Sarah, entrepreneurial, nice. The spirit is very French. Same with karate, also French. The sound makes the line more accurate. Well, you keep your sound effects on TradingView. You're crazy. Can't handle that. Both. Oh my God. Right, I've caught up with the 17 people talking in chat. And I say 17, that's perhaps an exaggeration. Where did all the people go? Anyway, I'm putting it out there. There's Shorta. There's a new name. Derp, how you doing? So great to see you all. You better be using the comments after the video because you just aren't using the chat box nearly enough. I know I've got it on top chat, so only certain people show up. But if I change that to live chat, it's actually even going to work. Oh, it is. He's never died. Yo, what sound does the WoW sound make on TradingView? We have to get TradingView up again. I'll get it up in the background. AMC chart there. See, that's what happens when you load up the AMC chart by TradeSpawn. We are all here listening intently. Yo, Dan Ernst, how's it going? That's great, right? So I can feel this movement happening in my head later moving. Let's chat, everybody. Let's chat. Let's sit down and chat. Let's have a chat. How have you been? Right? That would probably come with me lightly touching the top of your knee, just so you know I'm here, right? Tactile, right? And that, but I'd also slowly approach, right? I'd have wouldn't be directly looking at you, so you don't feel too threatened, right? I'm trying to build relationships here, and obviously not trying to over encroach, right? But we'll be hugging, crying. So what are we talking about? We are the right. I also just caught up. Whoops. Oh, as if I'm going to believe that. 18 people. I'm here just stuck on work stuff. Oh, work stuff, eh? Is that what you tell her, the other half? Sorry, honey, it's work stuff. It's work stuff, honey. Jamie, take your vitamins. Okay. Okay. Right, everyone's dead great in that, innit? So, thanks very much for watching it. The like button. Everybody seems happy. What did I see in the notifications? No faxes. Membership anniversaries. Nice. So, hey, great. Thanks everybody for sticking with the TradeSpotter. Right, I'll keep trying to do these sort of things. These sort of things. Obviously, I'll keep doing what I'm doing, but I'll also try to do this broadening the overall perspective of things. Like I was talking about that cycle there, and it was supposed to be evident and had to talk about loads of different things and open up all the different tabs and whatnot. And here for part 2 or whatever, I would have spoken about the fact that, there isn't some 18-year property cycle. Like things might have happened a couple of times that took 18 years or whatever, but that's not like what? Come on, eh? Like also, who's got 18 years? Nobody's got 18 years. Like you're trying to do something that takes 18 years. What is it? Like, is it terraform Mars or something? What is it? Like, what's your goals when you've got 18 years? I mean, it can't be easy for a house to increase in price. That seems quite a modest goal. 18 years. Anyway, I don't know. So, it also sounds like crap marketing, right? It's essentially crap. Anyway, but I understand where they're coming from and whatnot. But it isn't about that, right? It's about economic cycles. Those economic cycles that are due to contraction and expansion, which are all due to the shift in supply and demand, right? And not only the supply and demand shifting in terms of the relative dynamic with each other, but also their geographic location, right? Which means that the centers of production change. And then we go across geographic boundaries. So you're speaking about, the individual productivity in the centers of supply and where they relate to the currency which is dominant in that particular market, and then the one that's dominant for trading that thing internationally. So there's like so many other things, right? So many other things. It's like the idea of it being like, duh, it's because there's no more land anymore. That's not the fullness of the answer that you deserve. So we'll try and expand upon these narratives in a way that helps folks that have got perhaps find it intimidating. So you can pull the curtain back, right? It's not just shirts, it's everything, right? It's everything in life, full stop. There's always some like get behind the curtain who's like got this little megaphone trying to act more important than he is. It's usually a he, and usually he's a gay. Well, he is, right? So, or why would you be? And so, right. Careful though, he hardly ever wears any pants. So you don't want to catch him unawares for your own benefit, right? So like let them know we're coming with a loud stamping noise. Yes, so thanks very much. Yeah, and if you made it to the end of the video, thanks. That's really appreciated. And if this goes out live later and for some reason you still managed to make it to the end, then you're a trooper. Thanks very much. You probably enjoy the other stuff I do. You don't have to subscribe, but if you hit the like button, it's appreciated. And if you hit the subscribe button, then maybe you see more of me and I get to see more of you, and that'd be appreciated too. So yes, thanks. And in the rush to do things or talk or comment or interact across the internet with all the different people and concerns that I try to address, it may be that I say something about somebody somebody famous to make a point or to illustrate the point I'm currently making, which is generally speaking that you're in control of your own life and destiny. You don't have to compromise for anybody. You just need to find allies. And like, that's the way the world really works. And yes, so if I've ever said anything to illustrate a point that's just, drawn negative comparison or connotations about anybody that you care about, like, or think's important with regards to, actors out there in the world, important people or whatever, then know that I only do it to help people understand that they're in control and that nobody's like worth any idolization or adoration above that which you give yourself and respect for your own account when it comes to trading. And so if I've ever said anything about anybody famous that you identify with and you took that as being a criticism of you, then I apologize 100%. So thanks very much for watching the show. See you tomorrow.